Hello students, welcome to today's session on general entries. Okay, I'll walk us through in three segments, especially if you're talking about general entries concern. So first one is introduction, what is general entries? Next, I'll cover rules of debit and credit. Post that, I'll explain you what is the format of general entries. And in the last, some types of transactions and their sample entries, how the entry is done in general. All right. So just to begin with introduction. So what is general entries? So as far as definition is concerned, general entry are the first step in the accounting process where all business transactions are recorded chronologically. So chronologically means date wise. Okay. And every business firm or the individual having day in day out transactions, so all transactions must be entered in the journal. So journal entries, it is the very basic or first step in the accounting where all transactions are recorded chronologically. Okay, so date wise chronologically it should be recorded in the journal. All right. So the purpose, what is the purpose of this journal entries? So the purpose is to maintain a systematic record of all financial transactions. Okay, so the purpose of the journal entry or the entries in the transaction, the journal is to have the all the financial transactions recorded, or it is very easy reference and preparation of financial statement, right? Because it has a systematic record, it has chronological record. So the purpose is to maintain a systematic record for all financial transactions so that it can be easily referenced and prepare the financial statement for the stakeholders. Next one, the component of general entries. So component of general entries, definitely date, then the debit amount, how much amount will be debited, how much amount will be credited, and narration. So narration is nothing but the some sort of description of the transactions, what transaction has been happened. Suppose, if it is a uh, for furniture purchase on cash, right? So narration could be like furniture purchased on cash, one line. Okay, so that in future, if anything that needs to be looked at, they can easily refer. Which expenses was happened and what is the mode of the transactions. All right. Now moving to the next, that is rules of debit and credit. Okay, so as I mentioned, each and every transaction is classified into three accounts: personal account, real account, and nominal accounts. It is nothing but the classification of the accounts at broader level. Okay, so each and every transactions or each and every uh, 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 details must be classified in three segments: personal account, real account, and nominal account. And rules for each account is like, personal account, debit the receiver, credit the giver; real account, debit what comes in, credit what goes out; and for nominal account, debit all expenses and losses, credit all incomes and gain. So this is the golden rules of accounting, and it is applicable for all the transactions based upon their classification, whether it is personal account, real account, or nominal account. All right. Now I can show you how it looks like, especially the general entries format is concerned. Yeah. So definitely, as I mentioned in the component, one is date. So on which date transaction was done. Here I have just depicted 1/4/25. Particulars, it is related to, which account debit, which account credit, and the narration is like, machinery purchased or purchased machinery. All right. In debit side, the machinery account 50,000, and in the credit side, 50,000 for cash. So cash is real account. So as per the rule, what comes in or what goes out. So if it is cash goes out, that means in the credit side, and machinery comes in, both are real account. So the 50,000 in the debit side. Okay. So here the highlight narration and debit and credit columns because it is most important. And one point here is ledger folio. Ledger folio is nothing but the number which can be used to to refer for preparation of the ledger, and at the time of preparation we can refer with the help of journal folio. Okay. Now talking about the explain the importance of balancing debit and credit amounts. Okay. So if as I mentioned, for each and every transaction there is two legs, debit and credit. So definitely the amount should be matched. Here machinery account 50,000, definitely cash should be 15. There should not be 45,000, something like that. All right. But if it is something cash or something, credit, then definitely it should be like that. In another. But overall, debit and credit side must be matched. Moving to the next one. Okay. So especially the types of transaction and sample entries. Here I have a couple of, so common type of transaction is cash transaction, credit transaction, purchase and sale, receipt and payments, right? So for purchase account, debit purchase account and credit suppliers account, definitely, because both are personal account, and debit the giver, okay, and credit the receiver, something like that. We have to do that. Sales, debit customer and credit sales. Okay. Cash received. Cash received means whatever comes in for real account, cash comes in debit, and credit revenue accounts through which it comes. Then payment mode. Okay, payment made, debit expenses, all losses, and credit cash comes in. All right. So just to summarize it, okay. So general entry is the backbone of all, beginning of the all transactions, or backbone of the accounting. Okay. So for each transactions can be classified in different groups, segments. Okay. And based upon that, we can go ahead and understand the importance of the general entries, because these general entries are helpful in preparing the the ledger as well. Okay. All right. So that's it for today's session. Okay. And I hope you understand the topic clearly. Okay. Keep practicing, especially for the posting of generals. Okay. And let me know if you have any doubts. Please contact me through my Urban Pro profile. Thank you.